Welcome to the Deep Dive by Outlier, where we uncover the market's hidden trends and give you the edge you need. Head on over to ovtlyr.com right now to save time, make money, and start winning with less risk today. Now let's jump right in.
All right, welcome back, everyone. We're diving into something today that I think has everyone talking.
Yeah, big week.
You know, the 2024 election and how it's shaking up the stock market.
Definitely, yeah.
It's not every day we see a former president win a second term, but not consecutively.
Right, uncharted waters, right.
Yeah, and Donald Trump's win, I mean, it definitely has investors reacting in some ways that we haven't really seen before.
It's pretty fascinating, isn't it? I mean, this kind of situation, it throws out the usual playbook for analyzing what happens after an election.
Right, and we've got some really interesting stuff to dig into today. We've got some excerpts from a CNBC article.
Oh, yeah.
And it's called Dow Tops 44,000 for the first time, S&P 500 closes at record high to cap election week rally. Updates.
Okay.
And this was published just yesterday, November 8th, 2024.
Wow, hot off the press.
And let me tell you, it is packed with surprises.
Oh, I bet.
I mean, record highs for both the Dow and the S&P 500. Tesla hit $1 trillion market cap.
Wow.
And small cap stocks, suddenly they're the stars of the show.
So it sounds like investors are feeling pretty bullish about a second Trump presidency.
Yeah, it does seem that way.
But let's break it down a bit.
Okay.
What's really driving this market surge?
Yeah, so let's start with the Dow Jones Industrial Average.
Okay.
It just went past 44,000.
Really?
For the first time ever.
No kidding.
And the S&P 500 even touched 6,000 briefly. Both indexes had their best week since November 2023. The Dow is up 4.61%. And the S&P 500's up 4.66%.
Wow, those are some serious gains.
Yeah.
It really does seem like a vote of confidence in a Republican-controlled government. The CNBC article points to a few key factors, driving the sentiment,
right.
Anticipation of deregulation across a bunch of different industries.
Okay.
The potential for a surge in mergers and acquisitions. And of course, the possibility of those tax cuts, that are often associated with Republican economic policies.
So it sounds like a lot of investors are expecting, a more business-friendly environment under Trump, which could translate into higher profits. And that would, of course, drive up stock prices. It's perfectly okay to sit on the sidelines and wait for opportunities that align with your, investment philosophy and risk tolerance.
Absolutely. Patience is a virtue in investing.
It really is.
Sometimes the best investment is the one you don't make.
Very true. Okay, so we've talked about diversification, research, and patience.
Yeah.
But what about the emotional side of investing?
Right.
How can investors avoid making, impulsive decisions?
Yeah.
Driven by fear or greed?
That's a great question. Emotions can be a powerful force in the market, and they can often, lead investors astray. One way to manage your emotions is to have a clear investment plan.
Okay.
And stick to it.
So don't let the market's, ups and downs dictate your actions. Instead, make decisions based on your long-term goals and a well-defined strategy.
Exactly. It's also helpful to stay informed, but not overwhelmed.
Right.
Don't feel like you need to watch the market every minute of every day or react to every piece of news. Remember, noise is not the same as signal.
So filter out the noise.
Right.
Focus on the information that's, relevant to your investments. And don't be afraid to tune out that constant chatter.
Absolutely.
Yeah.
And if you're feeling uncertain or overwhelmed, don't hesitate to seek advice from a qualified financial advisor.
That's a great point. Sometimes having that, objective perspective can help you make, more informed and rational decisions.
Indeed. And remember, this is your money and it's your future. Don't be afraid to ask questions, do your research, and make decisions that feel right for you.
Okay, so as we wrap up this deep dive, I want to leave our listeners with one final thought. We've seen how a single event, like a presidential election, can just, send shockwaves through the market, creating both opportunities and challenges.
It's a reminder that the market is a dynamic and ever-evolving ecosystem. There will always be uncertainty, there will always be volatility, and there will always be surprises.
But amidst all that change, there's one constant: the power of knowledge. By staying informed, staying curious, and staying engaged, you can navigate the market's twists and turns and position yourself for well, for long-term success.
That's a great way to put it. And remember, investing is a journey, not a destination. Enjoy the ride, learn from your experiences, and never stop exploring.
Couldn't have said it better myself.
Mm-hmm.
Until next time, happy investing.
Hey, thanks so much for deep diving with us today. Head on over to outlier.com. That's OVTLYR.com to save time, make money, and start winning with less risk today. And we'll see you next time.